First, I will be covering water bounces. So this is like the most asked question, right? People don't say good morning. People don't say hi. They just say Unraveler, what's a bounce? That's the first question I get. They don't say hi, bye. They don't even like say anything. What is a bounce? Even in my Instagram, right? Like I hate that question so much with passion. So I'm going to teach you what a bounce is. And the next is what a reject is. And then I'll tell you what you need, right? What you need. What do you need? And then we'll go over Fibonacci sequence. So in the previous batches of AMU, all I did was cover fib ratios. I didn't cover certain aspects of the bounce strategy, the entire bounce and reject strategy. So I only covered fib ratios. So you guys are getting the whole package. So I'll cover sequence here as well, and I'll cover over the ratios. Then I'll go over the rules to follow in this strategy, both for bounces and rejects. And then I'll tell you what to do and how you can execute these trades. I know the execution is everything when it comes to bounces and rejects. So I'll tell you what you can do to improve your execution. And then lastly, we have a ton of examples. Okay. All right. So let's get started. So what is a bounce? When a stock is in a strong uptrend, there is a point, especially at market open, we want it to dip or sell off. So this concept, right? This concept is essentially like trends, right? Like when I went over trends in lesson number 2, I told you that even the strongest of trends, at some point, it's going to pull back and there is going to be a retracement, right? I told you nothing goes up forever, nothing goes down forever. There is going to be a reversal at some point, right? So think about a bullish stock, any bullish stock that you like, okay? Let it be Apple, let it be Facebook, anything like Tesla, whatever it is, right? If you see that stock popping off, like meaning it's in a strong uptrend, right? You see a lot of buying pressure. It's up 5% yesterday, and today pre-market it's already up 2%. Think about such a stock, okay? So when the market opens, do you think it's going to keep going up? Yes or no? Do you think it's going to keep going up? It's up 5% yesterday. It's up 2% more pre-market today. Do you think at market open it's going to keep going up? It's a question for you guys. Yes or no? The correct answer is no, right? It may go up. It may go up once market opens, but will you have a good risk reward in taking that trade? Like it's a common sense question, right? The stock is up 5% yesterday. The market opens and it's up 2%, right? How much, if you buy the top, how much more can it really go up? There is very little it can go up. So if you buy calls there, you're going to get screwed, right? It's a basic mistake. People think it's bullish. Oh, it doesn't matter where you buy. So you may be right about something, right? You may think that the stock is going to go up. You may be right. But if you get your entries wrong, especially in options, right? Because entry matters in options. Stock, if you just hold it long enough, it may reverse in your favor. But options, if you buy at the top and this thing reverses, by the time it comes down, you may be down 50%. It may trigger your stop loss. Okay. So buying at the right point is important. So when we see a stock with such bullish sentiment, that is the prerequisite, okay? What we want to do is we want it to sell off, okay? So I always call it bag holders, okay? I call all of these guys bag holders, okay? Meaning, so these guys, most of these stock trading guys probably are in NVIDIA since yesterday. Say NVIDIA, whatever stock, right? 5%, it was up yesterday, it was up 2% today. So naturally, when the market opens, they are going to take profits at the slightest sign of weakness, okay? Or they're just going to take profits, okay? So when people take profits, what do you think is going to happen? More sellers than buyers, the stock is going to fall, right? It's going to drop. So it's going to drop, people are going to sell. Everyone that wants to sell is going to keep selling. But at some point, everyone that wanted to sell, most of them have already sold, okay? And there are going to be guys like me, right? They are going to wait for that perfect pullback. There are going to be certain areas of demand, all right? There are going to be certain areas of demand, meaning people are going to want to buy the dip, right? Those are the areas where we are interested, okay? So when a stock is in a strong uptrend, there is a point, especially at market open, we want it to dip or sell off. This selling is mostly due to routine profit taking. Okay, so it's not a reversal. I'm not saying any of that negative stuff, right? I'm not saying any of that because the stock was up so much, right? It's going to hit a wall and there's going to immediately some profit taking, okay? But when it drops, right? People are going to be still interested in buying the stock. because it's bullish. Okay. Since the stock has a strong uptrend, there are many buyers waiting at key demand areas to buy it on a dip at a discounted price. So pay attention here. I use a term called demand areas. Okay. So I'm going to explain something about the market to you guys. So especially if you're used to trading equity, right? Especially if you're used to trading equity, you're not going to buy a stock at one price point. Okay. So if you're used to equity trading, right? So let's say a stock drops, let's say 200 or 202, BA is a bounce area for you. Okay. So when the stock is dropping, right? Equity traders, market makers, algos, everyone, right? How they're going to buy the dip is they're not going to put all their orders in one price point and create a wall. What they're going to do is they're going to buy 500 shares at 202, right? 500 more at 201.60, and then 500 more for 200.90 or something like that, right? That entire area is called a demand area because a lot of people are putting buy orders there. Can you guys hear me? Because someone just said they can't hear me. Can you guys hear me? Okay. Anyway, so who was that? Yusuf, you just have to log off and log back in. Okay, if you can't hear me, you probably can't hear that. All right. So do your thing, Yusuf, figure it out. Anyway, where was I? So demand areas, right? So there's a lot of buyers going to be there, right? So think of it like, so when you're going fast in a car, right? Let's say you're in a car, you're going like 90 miles an hour. There's a bunch of speed bumps, right? There's a bunch of speed bumps. Think of those speed bumps as buying orders. Okay, those speed bumps are buying orders. Their intention is to slow you down. All right. So if you're going at 90 miles an hour, one speed bump is not going to slow you down. But 3, 4, 5, 6, 7, 8, 9, 10 speed bumps along the road, soon enough, you're going to be riding at 50 miles an hour. You guys get the point, right? So the stock is dropping like crazy. All these buy orders in these demand zone areas, right? They're going to slowly eat away. They're going to slow the stock down, the selling down. Okay. I hope you guys can imagine this happening, right? So our goal is to wait for the stock to hit these demand areas and buy equity or call options and ride the reversal when it bounces back up. At market open, pay attention. When there is high volume and volatility, during market open, especially the first 5, 10, 15 minutes, right? The volume is at the highest, the momentum is at the highest, the volatility is at the highest. Here, this is when you can make quick money, great return on investments. You can make like 100% in just a couple of candles on options. Okay. At market open, when there's high volume and volatility, these bounces / reversals can be very strong, providing great opportunities, and they are great risk reward trades, right? Especially when you're buying on a dip, right? The stock has the potential to go back to the highs, right? So if you're buying, so if Nvidia was at 210 and the stock drops to 200, right? Nvidia was at 210 just pre-market. So if it bounces back up, it has the potential to make a $10 move. Okay, so there's great risk reward. But if Nvidia is already up 210 and it goes up 215, right? If you buy at 215, there is not a lot of risk reward there. Okay. All right. So just to recap, bounce. Does everyone understand what a bounce is? The term bounces, right? Stock is in a strong uptrend. We want it to sell off. We want people to take profit. We want to buy it on a dip. That's what we call as a bounce. Okay. So what is a reject? Right? No, stocks don't always go up. Like last week, we had a couple of bearish days, but it was not decisive at all. Though we sold off, it's mostly like Friday selling before holiday selling. It's like after Friday selling, suddenly market became bullish again. It's just nuts, right? So when the market is selling off, you want to capitalize on trading rejects, right? Especially when stocks are in a strong downtrend, you want to trade the downside and make money, right? Remember, trend is your friend. So when a stock is in a strong downtrend, meaning it's selling off, right? There is a point, especially at market open, where it can pop up, right? So if you see something sell off, at some point it's going to pop off, right? Because the trend does not just keep going down. At some point there is going to be a reversal. It's going to pop back up, okay? Now, this does not mean that this is a reversal. A lot of people, especially those just trading the 5-minute candle heroes, right? 5-minute, 1-minute candle heroes. They see a couple of green candles and, oh my God, bullish. I'm buying all the calls. Market's reversing. That's it. It's going to all-time highs, right? Don't be that guy. All right. So 5-minute, 1-minute heroes always lose money, right? But the stock is in a heavy selling pressure, right? the buying is mostly temporary due to shorts covering, right? If people are shorting the stock, at some point, even they are going to take profits. Like I said in the previous example, right? In Bounce, what did I say? The stock is up by a lot. People are going to take profits, meaning they're going to sell, right? People are going to take profits, that meaning they're going to sell. But if the stock is on a strong downtrend, right? At some point, the shorts are also going to take profits. No one's going to hold the bag forever, right? So they are going to take profits, meaning they're going to buy back the stock to cover their position. So when they buy back their stock, the stock is going to make a reversal or a reversal, all right? Sorry, this is a reject, right? So it's going to go back up, okay? Real buyer interest is still minimum, all right? Since the stock has a strong downtrend and there are many sellers waiting at key supply areas to sell their position when it pops back up or to reshort. So when you see the stock reversing off of a downtrend, right, at key supply areas, people are going to be wanting to take profits. Okay. So this is the most common thing a lot of people mistake. They see a couple of green candles, right? They see a couple of green candles and they think that there is a major reversal happening. But people are going to take profits because it's a heavy selling chart, right? So when it pops up, people are going to feel some relief. Oh my God, finally this thing pops. I'm going to get out, right? I want to recover what I can. I will start again tomorrow. So there are people like that. They are going to sell to ease the pain, right? Whenever there is a painful chart, remember equity traders, 90% of them are long biased. Okay, this is another psychological thing you guys need to know. Most equity traders that people are trading in the market or even investors, they're all long. Okay, only a small subset of people, especially professional people, are going to trade short. Okay, so since the bias is so long, a lot of people are holding big bags, right? So when they get a small sign of relief when the stock is popping up, right, they're going to want to sell, adding to the selling pressure. So at these key supply areas, they're going to sell, adding to selling pressure. And professional traders are going to short here again to ride the downtrend. Okay. So when that happens, the stock is expected to reverse. And that's where you want to buy your puts or re-enter the short yourself. Okay. So our goal is to wait for the stock to hit these supply areas, buy a put option or take equity short and ride the reversal after it rejects. At market open, when there is high volume and volatility, these rejects can be very strong, providing great opportunities, and they are great risk reward trades as well. Okay. So does everyone understand what a reject is? Reject is when you have a strong downtrending chart, at some point the stock is going to pop back up. You want to short at these supply areas or you want to buy put at these supply areas and ride the downtrend again. Okay. So that's a reject. Okay. All right. All right. So important slide. What do you need? What do you need to trade bounces and rejects? Number one, support and resistance levels from 1 hour and 4 hour chart. So we already in AMU, we've discussed what a support is, what a resistance is. We've already learned how to draw support and resistance lines. We've learned top-down analysis. Can I get a yes if you know what a support and resistance is? Yes, right? Everyone should know that. And the next is trend lines. I covered trend lines, so I bet that you guys should know that, right? If you say no, you guys, I don't know, you got to rewatch that lesson. So trend lines is nothing but a line drawn on a chart. It's for identifying trends, uptrends, downtrends, sideways trends. Trend is your friend, Marcus Jones. Yes. And next is EMAs. EMA is a trend following indicator. Mike covered EMA on day 4, I believe, right? So it's nothing but a line that is drawn on a chart again, right? It's a curly line, right? It just follows the price action. It's a trend following indicator. The next is fib retracement levels, which I'm sure you guys don't know. So I'll cover that today. Level 2 and times and sales, tape reading. Mike covered that, I believe, in the last class, right? This is nice. I say that it is nice to have, but you actually need it. Trust me, if you want to pull off some of the more complex bounces rejects, you need level 2, especially this is how you avoid fake outs. And you can sometimes you guys will notice things, right? Like I don't take certain trades, right? I have it in my watch list, but I sometimes I pull out, like I don't want to take it, right? So that's because of level 2 and tape reading skills. All right. Last, this price action lesson number 3. I taught you about momentum. I told you how to read momentum in stocks. Remember the 4 green candles, right? And the momentum killing candle. All of you remember that, right? The rules. strong momentum, weak momentum. I had that class here so that you guys are prepared for bounces and rejects. Okay. So most of these stuff you guys already know, but I'm going to pull it all together today. Okay. So let's start with Fibonacci sequences and ratios. The Fibonacci sequence. All right. Is everyone listening? Are you guys good? Yes? I want to make sure. All right. So let's cover Fib ratios. The Fibonacci sequence is a sequence of numbers where after 0 and 1, every number is the sum of the two previous numbers. This continues on to infinity. So just to summarize in normal words, right? Fib sequence is a sequence of numbers. Okay, just as think of a random sequence of numbers. Okay, so what they're saying is that is Leonardo Fibonacci came up with this, right? He copied Indian mathematicians and he came up with this sequence of numbers, right? After 0 and 1, all right, every number is the sum of the two previous numbers. So 0 plus 1 is 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. And this goes on until infinity. So basically, that's the Fibonacci sequence. So after 0 and 1, every number after the sequence is the sum of the two previous numbers. Now you may ask me, Unrav, why do I need to know this? Well, this is how Fibonacci ratios were created, right? This is how Fibonacci ratios were created. These strings of numbers, according to all these researchers, right? They contain unique mathematical properties. Okay, they contain unique mathematical properties which can be found in nature, architecture, science, statistics, and many other fields. Fibonacci ratios, right? Especially ratios, sequences in our field. What I want you guys to know here is Fibonacci sequence is just a sequence of numbers that after 0 and 1, every number in the sequence is the sum of the two previous numbers, and this continues on to infinity. It's used in a bunch of fields. Is used just a kind request. So Fibonacci retracement levels. It works on the theory that after price moves in one direction, price will retrace back to a previous level before resuming in the original direction. All right. This all of you should know. All right. So we see the stock going up, 4 green candles. What's going to happen? People are going to take profits, right? I told you in lesson number 2 that nothing lasts forever. It goes up, it has to come down. When it comes down, there will be an area where buyers are waiting to buy the stock on a discount, and that's where it's going to bounce. Okay. So this is a simple buy pattern. Okay. So the stock goes up, it's going to drop down. If it's bullish, people are going to buy it on the dip and it's going to go back up. All right. Now, this point here, B, this is where everyone gets paid their money. All the analysts that get they pay their money. Where is it going to reverse? Now, all of us know that it's going to go up, it's going to come down. But is it going to reverse? If the answer is yes, where is it going to reverse? Right? That is the $1 million question. So all these ratios that we just discussed in the last slide, right? So the ratio can be at 23.6, 38.2, 61.8, 78.6. These are all common retracement levels. So the Fibonacci ratio there, what they're saying is stock goes back, stock is going to reverse at one of these Fib retracement levels. Okay, it can be any one of these percentages. Okay. Now, someone is going to ask me, like I'm sure, why do you think this is going to work? What makes this percentage such a big deal, right? So the reason Fibonacci trading is very, very popular for number one is because it's already popular in other fields. Number two is computer algos love Fib ratios, right? Because all these companies, their primary dip buying technique, number one is going to be Fib ratios, and number two is going to be moving averages. Okay, these are, and then support resistance. In this order, this is how algos are programmed. Okay, I know because one of my friend actually programs algos. Okay, so Fib ratios are very important because hundreds and thousands of algos are watching these levels to buy or sell at these levels. And then many technical traders are also watching these key areas to buy or sell. Okay. So in the stock market, what did I tell you? If a lot of people are watching the same thing, if a lot of people are doing the same thing, chances are very high that that's going to work out, right? That is why Fib ratios are very, very strong. Okay. Is that clear? Is that making sense? Can I get a yes or no? right? In the stock market, don't try to be unique, right? Do what everyone's doing. That is the single most important factor for you to be successful. Okay. So what are the key retracement levels? 0.23, 0.38, 0.5 is officially not a fib retracement level, right? But like I said, lately in the market, the market is very strongly manipulated by algos. Okay, the algos have a tendency towards the 50% retracement level. So that's why I've added the 50% level here as well. 0.61 is the golden ratio, and then 0.76. So these are the key retracement levels. And the same thing applies for a sell pattern as well. So you see a stock strongly selling off. At some point, it's going to pop back up. At some point, people are going to take profits or reshort the stock. That is the sell pattern. This point B can be one of these ratios, 23.6, 38.2. In fact, it's just the same ratio. Okay. So how to find fib retracement levels? This is a question that we're going to get. All right. So the first point is identify two extreme points of a trend. Okay. One is swing high. So this is a swing high in a trend, and another is swing low. Okay. So all of you know what a swing high and swing low is. In the second lesson, we went over it. Stocks move like a wave-like pattern, right? So the bottom part is called a swing low. The top part is called a swing high. Okay. So in any chart that you take, right, especially in a longer time frame, you want to identify a trend. Once you have identified a trend, identify the most recent swing low point and the most recent swing high point. Underline most recent. Okay. You don't want to go back 5 months, 5 months back and so see what the swing low is. See what the most recent swing low is. Okay. So once you've identified that, connect those 2 points, A and B, using the Fibonacci retracement tool. All right. So the Fib retracement tool is in trading view. If you just play around, you can find that tool. And what you have to do is you have to connect those 2 points. All right. So this is a pro tip for you guys. If it's an uptrend, right? If it's an uptrend, Danny, I'll explain time frames and all of that later. Okay. That's not important right now. So in an uptrend, right? The number 1 Fib level needs to be plotted at the swing low point. What that means is, so number 1 level is 100% retracement. Okay. So if you're plotting an uptrend, Fib retracement levels on an uptrend, right? Start from point A, start from the low point, click here, drag it to the swing high points. Okay. Connect the lows, then to the high. Okay. That is what you need to do for an uptrend. If it's a downtrend, the 100% retracement level needs to be at the top because the stock is moving from up to down, right? You have to click at the highs and then connect to the lows. All right. Corey, I'll explain what time frame it is. Like, hold on, be patient. Like, don't spam the chat. All right. So, oh my God, what was I saying? All right. So the reason I say this is because, right? The reason I say this is because, let's take an example, all right? So stock moves from 200, let's say this is 200 to 210, okay? The stock makes a $10 move, all right? If the stock drops $1, $2, $3, $4, $5, all right? What am I going to say? You're going to say that the stock made a $10 move and then it drops a $5. So it retraces 50%. Okay, do you guys get that? That is what retracement means, right? The stock makes a $10 move, it gave back $5. It's 50% off, right? The stock costed $10, now it's worth $5, right? Okay, that is how you need to think of these things. So if you draw the percentages the other way around, it's all going to sound, it won't sound good, right? So that's why I always say if it's an uptrend, start from low to high. If it's a downtrend, draw the lines from high to low. Okay, it's just the pro way of looking at it. So when I see someone draw Fib levels, I always see them draw it wrong, right? I know that they don't know what they're doing. Okay, so this is how you need to draw it. All right, just like a perfectionist in me, I want you guys to draw it the right way. If it's an uptrend, connect from low to high. If it's a downtrend, connect from high to low. Okay. And next is, this is the most important slide in Fib ratios, guys. Everyone can draw it, but this slide, a lot of people won't know, right? So I already said, let's assume that this is a $10 move. Okay. So the stock was at $200. BA made a move to 210, right? And then you think that this is a very bullish stock. Okay. Then people are starting to take profits. Now, if the sentiment and the momentum on BA is very, very strong, right? It's going to bounce actually at a 0.23, but this graphic does not have a 0.23. But there is a level called 0.23. I told you in previous slide, right? 0.23 is the first fib level, meaning it's a 23 or almost 25% discount. Okay. Stock makes a $10 move. It pulls back $2.50. Okay. Think of it like that. Now, if buyers are very, very interested in the stock, they're going to buy that dip there. You can consider that trend very, very strong. Okay. But if it drops to 38.2, right? Meaning it drops 3.8, almost $4. Okay. Stock made a $10 move and it drops $4 or 38.2%, almost 38.2%. Okay. Then you can consider that as a strong trend. Meaning if the stock bounces here at the 38.2, you can consider that as a strong trend. But if the stock pulls back to the 50, meaning it retraced $5, stock made a $10 move, but it gave back half of its gains. Think about it in real life, guys. Something was going up. It gave back half of its gains. You're kind of suspicious on the stock, yes or no, right? If the stock is really, really that bullish, why did it pull back to the 50, right? Why did it give back half of its gains? If everyone really wants the stock, they would buy it before that, right? So that's why you have to be a little bit cautious once it gets to 50, right? That's why we call it as a normal trend. Okay. That's why we call anything that pulls to the 50 a normal trend. But if it pulls to 61, think about this. Like imagine this yourself. I want you guys to start thinking, right? Stock made a $10 move, but it gave back $6, almost $7, right? How is that bullish? Whoever bought, they took profit and maybe sellers took control. So this may be a time where you have to start think that this is a pump and dump or it's going to reverse or the selling pressure is way too strong, right? Okay. And imagine if a lot of people bought here, there's a lot of bag holders here too. So meaning this can be a very, very big sell-off signal. And once it breaks the reversal signal, that is the 100% retracement, meaning it gapped up $10 and it gapped down $10 and it's starting to reverse, right? That's the point where you have to start being bearish because everyone that bought up, they sold, some people kept buying the dip. So there's a lot of bag holders here. So the moment this breaks, everyone's going to start selling. Okay. Does everyone understand this? This is what I mean by retracement levels, right? So all these levels are nothing but measurements in a chart, math, right? There's nothing but measurements. Fib retracement levels are used to measure the distances between trends, candlesticks, right? That's all it is. That's why it can be used in trading, right? It's a mathematical method. It's not randomness. It's something measurable so that you can use it. All right. So I'm going to go over rules now, but does everyone understand what a retracement is? Yes, right? Yeah, 23% is nothing but a level, Sagar. It's just a level. It has to be here, but these guys didn't draw it. 23% is considered very, very strong. Okay. All right. So the next is EMAs. All right. So EMAs, all you guys know, it's a trend following indicator. So for the bounce and reject strategy, I'm going to go over what the EMAs I use. All right. So you will need to add the following EMAs to your chart. You need to add the 5, the 8, 13, 21, 50, 100, 200. Okay. But if you want to use the EMA clouds, right? So I'll show you what an EMA cloud is. This is an EMA cloud. If you want to use something like this, right? I started using this like 1 year back, on and off. I had to get used to it, but now I pretty much use the clouds all day. Okay. So if you want to use EMA clouds, you need to add this indicator, multi-EMA clouds, right? It can be very hard to get used to if you're used to the line EMAs, right? But you can get used to it if you want to, or you can just add the line EMAs, right? Line EMAs are very clean. A lot of people like to use it, but I like the clouds, starting to like the clouds more. So I use the clouds. If you want to add the clouds, you can use multi-EMA clouds, right? Okay. So for the multi-EMA clouds, this is the settings that I use. You guys can see all the EMAs here. You guys can take a screenshot if you want. These are all the EMAs that I have. It's pretty much the same. And this is not random numbers, by the way, guys. These are the numbers based on Fibonacci sequences. All right. These are the numbers are based on the Fibonacci sequences. All right. Why do you like clouds more? It's a lot more cleaner, right? And when you add so many lines in the chart, like I have to color code everything and this thing, and like it just messes with my brain. Like I don't, like I said, right, in the first, second class or something, there is a lot of things that your brain has very limiting processing power, right? You're watching 16 charts, you're listening to the news, you're listening to some guy in the chat asking what a bounce is, and then you are also listening, watching your positions, you're watching money tickers, news, the dog is crying. There's a lot of things that's going on, right? So if I have like 10 different EMAs, right, like all different colors, like it's sometimes very hard. Like that's especially that's what I figured out. And the ones highlighted are the ones that's really important, right? And in fact, I don't even use the 21. I only use 5, 8, 13, and 50. Okay. So these are the more important ones. Okay. So you can see this, you can see that's highlighted here, 5, 8, 13. These are the more important ones. Okay. Anyway, so you guys can add this to your chart. Like I don't want to spend too much time. You guys know already what EMA is. And these EMAs, my EMAs are all based on Fibonacci sequence. Okay, so you can see these are all Fib sequence numbers with the exception of 100 and 100. All right. All right. So how is everyone doing? Everyone good? So we're going to go over some rules right now. Rules for finding bounce spots. All right. Scan for stocks that are breaking out and in strong uptrends with strong momentum. That is the first important point. If you see something chopping around, even if it's your favorite stock that you traded 2 months back where you made $13, don't worry about it, right? What we are looking for is stocks that are breaking out, strong volume, strong mover, strong sentiment, right? That's what we want. And if you can't find something pre-market, go to the previous day and see which stock closed good, right? We always say day two continuation. That's something that we trade every day in the chat, right? So if we stock had a good day one, Apple had a good day one yesterday, we traded it today, right? So Nvidia had a good day. Nvidia had a good day yesterday. It had a very good day today. So tomorrow we're going to be trading it, right? That's how you need guys to think about it. Don't complicate things. Good traders, professional traders, companies, they all do this. All right. So don't complicate trading and try to find a like shady Chinese company that doesn't even have 1 million volume. Okay. Don't do that in the options world. You will get crushed. All right. I'm very serious, guys. I try to make it funny, but I'm very serious whenever I say this. Okay. Don't try to complicate trading. Do what everyone's doing. The stock needs to be trading above the 5 EMA on the 1 hour and 4 hour chart. This is an important rule for my strategy. All right. Stock always needs, especially for bounces, it has to be trading above the 5 EMA on the 1 hour and 4 hour charts. All right. Pre-market movers are good. So if stock is like rallying pre-market, that's good. Let it rally how much ever it wants. It's going to come back down and we're going to pick it on a dip. Okay. That's what you need to be looking for. So you will then need to open your 4 hour and 1 hour charts to find areas of confluence for bounce spots. I already said what area of confluence is. It's an area where number of confirmations, number of indicators, or number of things intersect, right? Those are the areas where a lot of buy orders and sell orders are going to be there. That's why it's important to find areas of confluence, but we're going to use only the 4 hour or 1 hour charts to find those. That's all you need. Okay. Rules for finding rejects. Scan for stocks that are breaking out. Oh, sorry, this should be breaking down. I don't know why I said breaking out. All right, scan for stocks that are breaking down, then strong downtrends with strong momentum. The same thing, if you see something selling off like crazy, for example, Stitch Fix, SFIX, yeah, Stitch Fix, sold off. Company was $100, now it's $20. Super strong selling, lots of bag holders. Tomorrow's candidate for a reject. Maybe you guys should do analysis after the AMU and find the reject spots and see if you can see what happens tomorrow. Do some homework. That's your homework for you guys. All right. Anyway, so the stock needs to be trading below the 5 EMA on the 1 hour and 4 hour chart. Pre-market movers are good. You will need to then open your 4 hour and 1 hour charts to find areas of confluence for rejects. All right. So these are the 2 rules that you need to follow. And then some execution tips. Please pay attention to the slide. Take a screenshot. You want to see momentum of the stock slowing down when it is approaching the bounce spot and the reject spot. Okay. Why is that important? I always say this, people take bounces reject sometimes when this point, the number 1 rule for execution is not even satisfied. Okay. You want to see momentum of the stock slowing down when it's approaching the bounce spot. Slowing momentum indicates increasing buying pressure. Think of it like applying brakes to a moving car. This is very important. Like I mentioned, the speed bump example, right? If your car is going at 90 miles an hour and you start applying brakes, will it stop immediately? No, right? It's going to slowly stop. First it's going to go to 90, then 80, 70, 60, 50, 40, 30. Then it's going to stop, right? Yes or no? Yes, right? It's not going to stop immediately. So what you want to happen when a stock is dropping like crazy? A lot of people are selling, right? When will the selling stop? When people have already, whoever wants to sell have already sold. That's number one. Number two is buyers buy it up. So whoever wants to sell, okay, give me your share, give me your share. All these buyers are just going to eat away all their shares, right? And then there are no more sellers remaining, right? Then the stock is going to reverse. Okay, that's what's going to happen, and that doesn't happen immediately. So if you see strong selling, if you have a level of 200 for a bounce, right? But if you see strong selling, no momentum slowing, no, it just flushes, right? You don't see any buyers or bids in the bid side. You don't see anyone coming in. If the stock just flushes, no slowing momentum, don't take that bounce. Don't take that bounce. What you want to see is some strong selling, but as the stock approaches the spot where you have the spot is an area, it can be 200 to 198 to 200, right? It can be when the stock is approaching that spot, you want to see it's struggling to move, right? You want to see some struggle happening there. All right. I hope you guys can picture it. Can you guys picture this happening? Because I can, right? You want to see that struggle happening. That struggle needs to happen. That's what I mean by slowing momentum. If you this won't come to you on just like that, right? You got to keep watching charts. You got to learn to feel the charts, right? It's like a living, breathing animal, right? You got to see it. Once you see enough slowing momentums happening, this will become like second nature. All right. This is just candlestick. You don't even have to look at level 2. Just slowing momentum. You can just look at it and you can tell, right? You guys learned about momentum already, right? Anyway, slowing momentum indicates increasing buying pressure. Think of it like applying brakes to a moving car. This is very important. You also want to see lots of bids holding around the bounce spots with good size, right? Like I said again, so if 198 to 200 to 202, right? If 200 is your bounce spot, you want to see a lot of buying happening before that level hits, right? 202, 201, you want to see a lot of buying happening there. This is very important, guys. People are not just going to buy at 200, okay? If people didn't buy at 201, 202, it's not going to bounce at 200. It's probably going to reject. It's going to get flushed through, okay? This is important. You want to see momentum start to slow before the spot comes. If 200 is your bounce spot, you want to see slowing happening a lot before that. And when you see level 2, you'll see a lot of people buying. You see a lot of bids, right? You see a lot of people buying there, right? You'll see a lot of orders coming in, and you'll see slowly all the sellers over, like there would be a lot of size on the selling side as well, and the ask side as well. But all those selling, right, is going to diminish as you approach, because all the buyers are just going to buy all the sellers out, right? That's what's going to happen. Okay. So you want to see a lot of bids holding around the bounce spots with good size. This means all the sell orders that are the strong sellers are being eaten away by the buyers. It's being eaten away by the hires, right? You also want to see ask prices slowly rising as offers get eaten away by bids. Can you explain bids holding? Yeah, sure. Just think about it. Okay. I will show you some charts, but think about it. 200 to 202. Okay. The stock is being selling off from 205. Okay. But as the stock approaches 202, you see a lot of bids. The number on the bid side is continuing to increase. The stock is struggling to sell off, right? The stock is struggling to break that wall. Think about it. Like 1,000 people are buying at 202 to 201.90. You have another 1,000. To 201.8, you have another 1,000, right? If the stock is going, the stock has to really break through all those walls, meaning whoever wants to sell, they have to hit the bid, like exhausting all those bids, right? So that's where you see slowing momentum. If there is no slow momentum, meaning all the sellers just hit all the bids and they eliminated all the bids. Okay, you guys do you guys understand what I'm saying? Yes or no? Yes, right. So everyone that wants to sell, they just hit the bid. So there are no bids, there are no walls, anymore. That's when the stock flushes, right? You don't want that to happen. You want to see a lot of walls. You want to think about you're in a horror movie, right? You're in a horror movie. There is a ghost outside or a demon outside. You want to close the door, but you also want to apply some kind of support, right? You have a couch, you have this thing and that thing. You don't want the demon to come in, right? The same way, right? You want a lot of walls there. All right. I don't know why I use that example. It feels dumb. I feel dumb when saying it. All right. Anyway, for rejects, you want to see the, okay, I forgot to explain this, right? You also want to see the ask prices slowly rising as offers get eaten away, right? So sometimes, or not sometimes, all the time, right? So once the stock hits the bounce area, right? There are no more selling, bids are holding. One thing you want to notice on the ask side, that is the offer side, is you want to see the offers rising, meaning people who wanted to sell, they are retreating away, meaning they are rising. Okay, so if they wanted to sell at 201.20, you see them retreating to 201.5, then 201.7. What that means is that the bids are eating away the offers, right? Whoever wants to buy, they're hitting the ask now, they're eating away all the wall on the ask side, right? They're eating away all the ask side, so the stock has room to go up, right? Just when I said about breakouts, right? Remember, if 200 is a big wall, right? You want to see that wall break, and meaning if everyone wants to sell at 200, you want all the buyers to buy the 200 sell wall and break through. All right. That's what you want to see. It's all happening so fast though. Yes, it's happening so fast. That's why I say reading momentum is very important, right? You want to see the slowing of momentum happening before you hit your bounce spot. If that slowing of momentum doesn't happen, it does mean that dazzling selling pressure is too strong. Okay. Vincent, it's not that easy. I'm telling you, this is not easy. If it's easy, every idiot is going to be very successful doing it, right? It's not easy. That's why I say it requires time, but there is a method to it. That system is what I'm teaching you. This is my system, right? That's why I say that you got to keep trying this, analyze this, backtest this, and then it'll work, because like you guys see my fills and thing every day, right? It works. All right. You just got to work hard for it. All right. So for rejects, you want to see the same thing happening. You want to see a thin bid and a big ask, and with some stacking. So when the stock is falling, you'll see weak bids, meaning if the stock is free falling, ask yourself this question: free falling, who's going to want to buy the falling knife? No one is going to want to buy the falling knife, right? So you'll always see weak bids there. So not a lot of walls or anything. It's just going to be like think about the door with a with, instead of a lock, you have a Cheetos, right? You've seen that meme. Have you guys seen that meme? The Cheetos is easily going to break, right? The Cheetos is not going to be that strong. Right? Think of it like that, right? So it's good. The bids are weak. It's not going to hold. And you see big offers, meaning a lot of sellers are there. So they're going to not allow the stock to pop back up. Okay. So bid prices will slowly drop as they fail to eat away the offers, causing the stock to pull back. And all right. Fast tape. So a lot of someone asks what is tape is. Tape is nothing but time and sales, right? Times and sales is what we call as tape. We call it tape because in the old days, right? Tape is where you used to record everything, right? They just stuck and they called it the same thing, right? The tape is nothing but the transaction record. It records all the transaction times and sales, right? That's why we call it a tape, right? That is the history behind that. Okay. So fast tape means good volume. So if you see the tape, when the stock is approaching the bounce spot, right? If you see a lot of, you want to see a lot of volume, right? But at the same time, sometimes you may not know how to measure that, right? So you want to see a fast moving tape. You want to see like a tape acting like a big, how do I put it? Some, I want to say something smart, but it's just not coming. You want to see the tape moving smart, fast, very fast, super fast, like Fast and Furious movie, like flicker, like a slot machine. Yes, there you go. You want to see it act like a slot machine. All right. Thank you. Thank you for that. You saved me. All right. Anyway, so these are the rules. Take a screenshot. All right. We'll go to some charts now. All right. So let's look at some charts. This is from the chat, right? You must have seen this watch list and tried to decipher it, right? So let's take a look at the first example, Netflix 539 or 535 bounce, right? So what I'm trying to say here is that Netflix may bounce at 539. If it doesn't bounce at 539, it's going to bounce at 535. All right. That's what I'm saying. All right. That's what I'm trying to say here. Okay. Can you guys read the signal now? Can you guys read this better after the so far? What have you covered so far? If I said Tesla 668 to 670 bounce, I'm expecting a lot of buying pressure there, right? I think the stock is going to get to that level. If we see slowing momentum and we like what we see, the stock can make a big move after that. All right. So this is Netflix. I was actually in California, Lake Tahoe. I wasn't used to trading that time zone. So I just hit a couple of trades and went back to bed. All right. So that's what I did. Let's go look at it. All right. So I'm starting with the 4 hours, 4-hour time frame. All right. And let me explain how the clouds look like. So this is EMA clouds. All right. So the top of the cloud here is the 5 EMA. This is the 8 EMA. This big, the middle green line you see within the cloud is the 8 EMA. This is the 21 EMA. And this is the 35 to 50 cloud. And then the other two clouds. Okay. I don't use all of these clouds. These clouds are more important. All right. These clouds are more important. All right. That is what I use primarily. So this is Netflix's chart. Netflix had a very strong day one the previous day. Okay, so this is the setup that we called as day one continuation. So we had a strong day one, day two, we are expecting the stock to sell off a little and then bounce. Okay, this is a classic setup. It works every time. It's proven, right? So you guys should know most of the stocks that we choose are probably most likely fall into this category, right? It's not rocket science. We're not trying to reinvent the wheel or anything, or we're not like some rocket scientists like trying to find some major stock or whatever, right? We're just going back in time, going back the previous day and see what was good. And then we're choosing to trade the same thing next day. All right. It's that simple. Okay. If it's really good, it has to be simple. That's in just my opinion. If it requires you to do so much thing and that, it's probably not simple, right? And probably not worth it. All right. So we had Netflix had a strong day one. Now, first prerequisite for my bounce strategy, what did I say? The stock has to be trading above the 5 EMA. Hope you guys took a screenshot of that. The stock has to be trading above the 5 EMA on the 4-hour chart, right? If it's trading above the 5 EMA on the 4-hour chart, it's also trading above the 5 EMA on the 1-hour chart as well, right? So this is the 1-hour chart. You guys can see the stock is like almost about the 5 EMA. So it's pretty good, pretty decent. But the 4-hour is very important. You absolutely want to make sure that the stock is trading above the 5 EMA on the 4-hour chart. Okay. So my level here is 539. Okay, that you saw my watch list, right? I said I wanted to bounce at 539 or 535. So the reason I chose 539, number one, is first because I drew the Fib retracement. Okay, so I saw the strong uptrend, right, on Netflix. Okay, so I went to the most recent swing low. When was the last time Netflix had a big dip, right? So this is the stock was had a big sell-off, right? Consolidating. This was the last swing low. All right. So I set this point here, number one. And if you go back in time, this one bounce here, a couple of bounces here, and a lot of bounces here. So I really like this level, 505 to 507, right? I like this level. So this is my swing low point. And where is the swing high point? Swing high point is the previous day's high, right? 548, around 549, right? It's the swing high point, okay? So that's why I choose point one here and point two here, and I drew two lines and connected the points. Once I did that, I have all my levels plotted on my chart. All right. So the Fib 23%. Remember that this diagram that I showed you, right? This diagram, what did I say? 23% is the first sign. That's where usually the first bounces, that's where the first buyers are going to be waiting. So Netflix, since it had a very strong day one, the stock has a very high chance of bouncing at the 23.6 level. Okay. The 23.6 level, right, is also it's 538.63, right? So I like to use whole numbers, so I chose 539, and I didn't just choose it because of that. The 539 is also very close to the 5 EMA on the 4-hour chart. You guys can see this, right? It's very, very close. So it's already an area of confluence, right? But if I also go back in time, 539 area was this area, like I don't use levels. I already told you guys, 539, 538.7060, it's all the same for me, right? So you guys can see that this is a strong area, was a strong area of resistance. It broke out, broke down, became resistance to support, then support became resistance here again, right? So this is a very strong area. 539 is a major area of confluence with there is a possibility that there's a lot of buyers waiting to buy the stock on this day, right? And then 535. Why did I choose 535? If 539 broke, the stock set a high of 548. It's already pulling back. So at some point, it's going to have to bounce, right? So 535, I chose 535 because go back in time again, it's a whole number. Lot of resistance is here again, right? So 535 is a major macro level, right? And it's also coinciding with the 8 EMA on the 4-hour chart. And it is also very, very, very close to the 0.38 level. right? You guys can see this, right? It's just a few dollars off. So 33, if I maybe adjust this lower level a little bit, right? If I adjust this a little bit, 530, 0.38 will probably align with 535 very perfectly, right? So $1, 30 cents, 40 cents, it doesn't matter. Okay, so this is also another area of confidence. Now, next question, someone, why didn't you bounce it at 527? What did I tell you when I showed you this, right? If you think something is a strong uptrend and it doesn't bounce at 0.23 and it doesn't bounce at 0.38, right? There is a lot of bag holders. So 0.5 level bounce will be very weak after just one day. Okay. So if it's a day one move, you want absolutely to make sure the stock bounces at the first level or the second level. Because if it doesn't, it's a weak move. Okay. It may still bounce, but you don't want to take that, right? You don't want to risk that. Okay. I've done it because I have experience. I've done it. I've even bounced stuff from 61, right? Like you just have to be experienced enough to do it. But my recommendation for you guys, be a strong mover, watch the 0.23, watch the 0.38, find areas of confidence. Okay, is everyone following? Yes. Okay, all right, so next look at the 1 hour chart. There is nothing different in the 1 hour chart. You just see a lot of different more candles here. So you see this 1 4 hour candle. Instead of that, you see 4 1 hour candles. So 1 2 3 4, and then you see a lot of consolidation happening here. So the beauty about this chart is you have a solid day one move. The stock didn't really give back its gains at all. You guys can see that the stock didn't pull back at all. It was still consolidating. It probably made a 10% retracement. It just pulled back 1 2 3 4 5 6 7 8. For 8 hours, it consolidated and only pulled back 10%. That is a great stock, right? I'm not saying Netflix is a great stock. On the day, it's a great stock. Okay, so it's a very nice. It's holding. This is very nice. And then we go to the 5-minute chart. So this is what happened the previous day for Netflix. Lot of 5-minute candles, right? You guys can see how beautiful this is, right? It respected the 5 EMA. It pulled back to the 8 EMA here, right? There's some selling. Buyers bought the 8 EMA dip. The stock went up, right? And then it rejected, and then it just chopped away after that. That's why we take most of our trades before 11 o'clock. After 11 o'clock, people are going to take profits. You won't see good momentum. People always ask, Unraveler, why don't you trade all day like all the others? I don't trade because this happens. You can't trade this. Is this an uptrend or a downtrend or a what trend? This is a sideways trend, right? Don't say this is a flag and all of that, man. This is nothing, right? This is not money making, right? You want to trade when you don't want to trade here, right? You want to trade here. Some people will be like legit, like the stock made a $10 move. It dropped this way. It dropped like all the way back. They will draw a flag. Unraveler is just a bull flag. No, it's not a bull flag. It's a reverse. All right. This is what you want to be a part of. A lot of people are trading. You want to make your money and call it a day. Okay. Anyway, so this is what happened. Let's see what happened after market open. You guys can see 539. Where did the stock bounce? Stock bounce exactly at 539. You can actually, someone says, right? So you can go back to this day on the chart, right? And go to TOS on demand. TOS as an on-demand feature. You can go back in time and see what happened in level 2 and times and sales on this day, right? And see how the candlestick moved up when it approaches the bounce spot, right? See what happened on this day. When the candlestick pulled back, you would see slowing momentum like crazy. Once you see the big wick happening, 539, I knew that it was going to bounce. In fact, I didn't even like hold the whole thing, right? I only held for one candle. I got the reversal and I got one candle and I made profits and I went back to bed, right? But if you were patient and if you had good risk management and sizing, you could easily ride the whole trend. The stock bounced from 539 all the way back to 552, right? In 1, 2, 3, 4, 5, 6, 7 candles. In 35 minutes, it bounced a lot of points, right? Okay. The stock, again, 539 is not what you want to be looking for, guys. I keep saying this over and over, right? When the stock is dropping, right? 539 means 540, 541, 542. When the stock is approaching this level, you want to see the selling slowing down. You want to see the candles struggling, right? You want to see that happening. Once it approaches the level, you will notice that like the stock is just going to wick off. You can see the slowing momentum. You will know you can go in once the stock hits this level. That's when you hit the buy, right? Once you hit the buy, you'll make money, I'm sure, right? So you just have to trust the process and keep doing it, right? Remember, guys, when I tell you you keep buying, oh, let's say I want to trade Netflix above 548 for calls, you wouldn't even blink twice. If I ask you to buy here, you won't even blink twice. Oh, I'll buy here, like, because everything is green. But when things are selling off, you don't want to buy, right? I'm telling you, you just have to watch momentum. Okay, you guys will get it. Just keep trying. All right, just keep watching, and that's how you'll understand. All right. Anyway, so next is TTD bounce, right? TTD bounce 74 or 72.5, right? This is what I posted. This is what I made. This is not like this is real trading, right? I actually execute what I post, right? Unlike other chartists. Okay. Anyway, I'm sorry. So this is the trade desk. This is trade desk and 4-hour chart, right? So prerequisite of solid day one on Netflix, right? Don't worry, guys. I'm still funny. Anyway, what is I saying? Yeah, solid day one on Netflix. Trading about the 5 EMA on the 4-hour chart. We're good. Same kind of setup, guys. Memorize these setups, guys. Like that's what I keep saying. Like, if you see this chart like this, memorize this. That's when you can make money, right? Trading about the 5-hour, and I drew my fibs. You guys can see 0.23, 0.38, aligning perfectly. If I go back in time on this chart, you guys can see this was actually a resistance level again, right? Perfect area for a bounce play. These are the two zones that you want to watch, right? And then this is the 1-hour chart, trading still above, very bullish. This is what happened the previous day on the 5-minute chart. Solid move, some profit taking, and then after hours gap up. So it's still very, very bullish. This is what happened on that day, right? Market opened, it popped back, it opened here, it went as high as here, and then it dropped. This is where all our buyers are waiting. Again, this was a Friday, so it was an insane trade. Once it dropped here to this area, just executed it, right? And then big pop up, made money, right? Again, you don't need a huge move, guys. These are great risk reward trades. Once you're buying here, if the candle just slightly reverses, you're buying into weakness, you'd make like 30, 40, 50% easy, right? You can make that, and you don't even have to hold that long. You can look 10, 20%. I usually take like 25%, 30%. If it's there, I'll start taking profits, right? It depends on what I see. I usually don't focus on percentages or whatnot. I just watch price action. If I like what I see, I'll hold. If I don't, I'll just take profits. Remember, when you're trading the market open, pay attention to this point. When you're trading the market open, things happen a lot quickly. So you got to take profits quickly. Okay. This is an example of what level 2 looked like. I actually struggled to go back in time and get the perfect screenshots. But as the stock approached, so the stock is still at 74.38. Okay, the bounce happened, but look at how it's here, right? You guys can see all the stacking happening, right? And look at where the ask is. It's 74.59. The ask is already retreating away, right? So this is when you know the stock has already bounced, right? So this is what happened after the stock bounced. You see still bids are very strong, but the offers are receding away, right? The offers are not dropping. The offers are not approaching this level. They're saying, hey, okay, we've done our selling. We are moving away now. We're moving away. So what's going to happen? All these guys who want to get filled, they're going to hit the ask. They're going to chase the ask away, right? They're going to buy the ask. And as they keep buying the ask, once they deplete the 74.59, they're going to go after the 74.71. Once they do that, they're going to go after the 74.78s, then 75s. Like, you guys get this point, right? That's what they're going to do. They're going to eat away all of this, right? They're going to eat away all these ask orders, and you're going to see bids also rising. Okay, this is an example of what's going to happen. But the main point here is momentum needs to slow down. Okay, this is Datadog, same thing, 127, 128.3, right? Despite bounce, what is that? Next week, I chose next week contracts, right? Strong day one move, Datadog, right? Strong day one move after earnings, Datadog, huge move. This is a solid candidate, 4-hour chart, right? And this is again the 1-hour chart. Okay, what happened? What are the bounce spots for us? 128 point. Again, the reason I chose such a big bounce spot for this is the stock is up like an insane amount, right? It's hard to be precise on where it's going to bounce. So I had 128.24 to 127 or 124 as the levels here. Why? Because I went back in time and found an area of confluence. Okay, so let's see what happens. So this is the 5-minute chart for the day before, for what happened for Datadog. You guys can see kind of where exactly the stock bounced. So this was the resistance, it bounced, it broke, right? It's a very, very strong stock back then, right? And look what happened. The stock actually gapped up like crazy right before market open, right? It gapped up like crazy. And once the market opened, as it was leading to market open, started selling off like crazy. Started selling off like crazy, right? But look at exactly where it bounced. Like I said, sometimes people always message me, Unravel, it didn't hit your level. I'm not like a rocket scientist, right? I can say I can say an area where it's going to bounce, but if the stock has such a big range, right? It's going to bounce in this area. That's all I know, right? So if you think that it's a really hard, you just have to watch price action and decide at that point. Okay, I'm not a rocket scientist. I'm not going to claim that I know what's going to happen in the future, but I know that it's going to bounce in this area, right? This is a more complex setup, I agree, because take a look at it. You had to hold for a couple of candles, right? That's why we have stop losses and everything, but there was no reason for me to sell off because the stock was selling off like all day. You can see all the wicking. So that's why I was holding this. And once the bounce happened, it just like I was able to make money, right? Actually took this trade. So like you can see the screenshot. Okay. And then NVIDIA reject, right? NVIDIA strong selling pre-market. So we wanted to take rejects below 785. This was before the split. Sorry, 800 or 810 reject or below 785 for puts, right? So NVIDIA strong selling. You guys can see this. Overnight it gapped down due to some bad news, right? Again, this was before the stock. I posted this before the split, but I took the screenshot after the split. So times 4, right? 200 into 4 is 800. Okay. So this was one of the reject spots. If it breaks this, I said 201.52 because that is the 38.2 level. So 23.6, 23 point and 38 point are very important levels on the 4 hours. Okay. And you guys can see all these confluences here. So you guys know that these are strong areas of selling going to happen if it pops back up. So this is again the 1 hour chart for NVIDIA. You guys can see the candles a little bit more clearly here, right? This is the 5-minute chart. There's not a lot of data because it's pre-market action. The stock gap down pre-market, right? But you guys can see all the levels already plotted. So once the market opens, what I want to happen is I want to see NVIDIA pop here, pop back up here. And I want to see the same slowing momentum happening here. If I see a lot of size on the offer side and I see bids dropping, I know that the stock is going to reverse, right? See what happened? Stock popped back up. First reject at 200. Like I said, I can't be perfect. It actually popped above 200 a little bit, like probably 30 or 40 cents, right? But then sellers took control and then we see big drop, right? Big drop. And then we chopped around. Actually, price action was not great, to be honest, guys. That day, it wasn't that great, but we still managed to make money. You guys saw it, right? It's a lot of choppiness here, like not a lot of, we didn't know what's going to happen. Then we had a big pop. It actually rejected the second level here as well, 201.5, close to that area, and then sold off to the end of the day. This is a choppy market. This is a choppy day, but it still works. You guys can see rejects levels can still work. Okay. This is Tesla reject again, 600 or 609 reject on Tesla, right? So this is one of those plays where everything is not perfect, right? So on the 4 hour, you guys can see, where is that? 600 and 609, right? So 600 level is here, 609 level is here. I actually had 620 here as well. So since it's a downtrend, this is the most recent swing high. This is the most recent swing low. So I drew a trend levels here like that. And you guys can see the 23% is here and the 38% is here, right? So I want the 609 reject first, but I have the 600 level because it was a psychological number, right? So let's see what happened. Tesla 1 hour, same chart. Tesla 5-minute the previous day. Let's see what happened after market open, right? So this is a very complex trade, guys. This is a very complex trade. Those blue levels are my lines, man. I drew support and resistance lines. So market opened, it broke 600. So right through it just, when market opened, it just broke 600 right away. So there wasn't no time to reject 600. So when it approached 609, 610, it rejected hard. It rejected very, very hard, but it dropped back down to the 596 or pre-market low. Bulls bought it back. Tesla is one of those weird stocks that can happen. I actually got squeezed a couple of weeks back too, right? Maybe 1 month ago now, like I lost like 36K, right? Then it squeezed, it broke this highs, right? It broke this highs, then dropped, it became an uptrending chart. We did make money off of this trade. You guys saw me make money off of this trade. It was a 2% drop, right? But it was a very quick trade, right? You guys can see this is a very difficult trade. Sometimes you have to take, so if people just continue to hold right? If you just continue to hold on hope, right? You probably got crushed that day, right? Speed is important, especially at the market open, especially if you're shorting Tesla, be careful. It's just a warning from me, right? In current market, that like Tesla, like it's very, very hard to be bearish on Tesla, right? Because the moment you're bearish, it can like really come back. Okay. So this is a riskier trade, but it can still work, but you got to be careful. Sometimes it may not work. So you got to be careful as well. All right. Anyway, so that's all I have for you guys. I went a little bit over time, but hope you guys enjoyed today's lesson. I'll be passing it off to Aristotle.